North American stock markets have just closed after a brutal day of trading. They took a massive tumble.
In New York, where Wall Street took another dive today, the Dow fell roughly 2,200 points, about 5%.
Thursday's losses making this the worst two-day streak for the market since the early days of the COVID pandemic.
President Trump says the markets are going to boom.
In the world of finance, everything can be turned upside down. In a moment of emotion and information. It was just such a moment. A day that will go down in history for the U.S. stock market. The U.S. stock market lost more than $3.1 trillion in one day. All three major U.S. stock exchanges closed on their worst day since June 2020 during the COVID pandemic, with more than $3.1 trillion of market capitalization evaporating in one day. Wall Street is witnessing perhaps one of the most traumatic days in modern economic history. This protectionist move, dubbed Independence Day, claimed to protect the American manufacturer, but it has virtually collapsed almost all stock market indices, from Dow Jones to Nasdaq, from the S&P 500 to technology giants. The record meltdown in such a short period of time raises the question, where will this lead both in political circles in Washington and in global financial markets, as almost every sector, from automotive to energy, from software to agriculture, is hit by tariffs. The world economic scene is beginning to face the prospect of an all-out trade war. So what does this Independence Day really represent? What consequences could the Trump administration's harsh protectionist policies have for the wallets of the American people and the bottom lines of corporations? And is the loss of $3.1 trillion, which mark a nightmarish day, with alarm bells ringing in the markets, the first signal of a deepening crisis ahead? Here are the answers to all these questions and the behind-the-scenes story of the massive stock market meltdown. The United States, this country which has been known as the cradle of innovation, technology, and global finance for decades, opened the door to a stormy period in world trade, with new tariffs announced on April 2, 2025, while the White House claimed that this move, announced as Independence Day, would free American industry from foreign competition. The news coming out of the stock markets on the morning of April 3rd painted a less than rosy picture. More than $3.1 trillion of market capitalization evaporated from Wall Street in one day. Some experts say this is the biggest sudden meltdown in recent years, signaling a historic collapse. Investors lost more than $3.1 trillion in 24 hours, causing panic and anxiety in the markets. In particular, giant American companies such as Tesla, IBM, and Apple have suffered and continue to suffer. This situation directly reveals reactions to the Trump administration. Here, Apple's problems and reactions are really remarkable. The tariffs imposed by U.S. President Donald Trump in early April suddenly made Apple's imported components more expensive, while the company's shares fell sharply in a short time. Apple, which directly felt the pressure of the tariffs, due to its reliance on China for most of its production, reacted openly to the Trump administration. The company's executives addressed the public with the message, "This move both inflates costs and threatens employment." Apple's overdependence on the Chinese market and production lines is now costing Apple increased costs and supply disruptions. Apple could face more radical production shifts or price hikes if the escalating tensions are not resolved. In the short term, the picture is a stark reminder that Trump's trade war could hit leading U.S. companies, not just competitors, as stocks plummeted. Analysts and economists began to investigate the reasons behind this sudden decline, while the loss of investor confidence is seen as a harbinger of possible economic uncertainties. At the White House yesterday, Trump took a high-stakes gamble to reverse decades of U.S.-led liberalization that has shaped the global trade order. In many ways, this gamble proved very expensive. President Donald Trump's decision to impose sweeping tariffs on almost all U.S. imports hit markets on Thursday as investors reacted sharply to Trump's efforts to reorder global trade. The broad-based S&P 500 index fell nearly 5%, suffering its biggest single-day drop since June 2020. In the depths of the COVID-19 pandemic, a drop of nearly $2 trillion. The Dow Jones Industrial Average also had its worst day since the same month, 5 years ago, closing down 4%. The tech-heavy Nasdaq fell 6%, its biggest drop since March 2020. Retail stocks were among the hardest hit on Thursday. Trump's tariffs on manufacturing centers such as China could have been as high as 54%. Nike shares fell 14.5%, while Lululemon shares fell 10%. Ralph Lauren lost 16% meanwhile. The US dollar depreciated by at least 0.2% compared to other major currencies on Thursday morning, hitting a 6-month low, while oil prices fell on fears of a global slowdown. U.S. stock futures, an indicator of the likely direction of the market, fell after the announcement, even though the U.S. equity market has become accustomed to turbulent mornings. Over the past few weeks, traders expressed concern that the tariffs could fuel inflation and stall growth. Trump does not seem to be able to implement the economic development and stability that he based his election strategies on. The steepest declines were, as we have just mentioned, in the giant American companies. Apple shares have lost 12% of their value since mid-April, which means that nearly $200 billion has evaporated from the company's market capitalization. More importantly, forward-looking financial projections show that, if the new tariffs continue, Apple's production costs could rise by 8 to 10%, and profitability would be severely weakened. This picture is pushing Apple into direct contact with the White House. If these tariffs continue, our production network will take a major hit. The company's executives told the White House, asking for an exception. Apple's request is clear: either a reduction in tariffs on China or an exemption otherwise. Supply chain barriers and a stock slump could quickly lead to a loss of more than $350 billion. This shows that U.S. trade policies can have a severe impact, not only on foreign competitors, but also on its own tech giants. This downturn is likely to force a review of the tax cuts and regulations that Trump has championed. In morning trading just a few hours ago, Japan's Nikkei 225 index fell 2.7%, and Australia's ASX 200 fell 1.6%. South Korea's Kospi was flat to slightly down. Markets in mainland China and Hong Kong are closed for the Qingming Festival. On Thursday, the S&P 500 index, which tracks the 500 largest American firms, fell 4.8%, losing nearly $2 trillion in value. The sell-off in U.S. stocks has been ongoing since mid-February, amid trade war fears earlier. Britain's FTSE 100 stock index fell 1.5%, while other European stock markets from Japan to Hong Kong also saw declines. Oil drillers also suffered big losses, led by Valero Energy, whose shares fell 15%. The price of crude oil fell almost 7%, on fears of a slowdown in global growth. Smaller businesses, as represented by the Russell 2000 index, were not immune, with the index closing down 6.6% on Thursday. It has lost more than 20% since peaking in November. A critical development is taking place every second. Clearly the first and most obvious takeaway from this week's tariff announcement was the stock market. So how did investors react to this scenario? Of course, investors felt a deep sense of dread. For weeks, investors and analysts have been trying to predict the size and scope of the tariffs, exactly who would be affected and by how much. That uncertainty partially ended when the policy was announced. And when the tide receded, it was clear that the market had completely failed to price in the news. Market observers were shocked by the fact that the tariffs came harder and more sweeping than many had expected. On the one hand, tariffs can still be used as a bargaining tool to obtain trade concessions from other governments, but their sudden impact caused panic in the markets, as expectations of higher prices, stalled growth, and heightened tensions took center stage. Recession calculations have changed dramatically. Wall Street economists are sounding the alarm that an economic downturn may be on the horizon. Part of the spike in reactions to the tariff policy was that economists and strategists were cutting their growth forecasts because a new protectionist regime could place a heavy burden on U.S. trade. Amid all these fears of an economic recession, drove investors to the safety of treasuries. J.P. Morgan analysts raised their recession probability forecast to 60% after the announcement of the new tariffs. After the details of the U.S. president's tariffs were announced, late the previous day, some of America's allies reacted sharply. French President Emmanuel Macron said Europe was considering retaliation against U.S. tech companies, while Canadian Prime Minister Mark Carney said his country would respond to President Trump's auto tariffs with 25% of its own tariffs. In Europe, tariffs could cut growth by about 1 percentage point, according to analysts at Principal Asset Management, and the bloc could be hit even more negatively if it retaliates. Seymour Shah, the firm's global chief strategist, warned that a recession in the U.S. is likely without other changes changes, such as the big tax cuts that Trump has also promised. She said Trump's goals to revitalize manufacturing would be a process that would take years. If it happens at all, some share continue. Meanwhile, high tariffs on imports are likely to have an immediate negative impact on the economy, with limited short-term benefits. Despite all the tension, Trump took the wave of selling calmly. Here's how Trump responded to a question about the tariffs. On Thursday afternoon, I think it's going very well. The markets are going to explode. He left the door open to making deals to lower tariffs, but also promised new deals for pharmaceuticals and semiconductors. While Trump thought everything was going well, dozens of well-known stocks, including HP, Nike, and Target, posted double-digit declines. Stellantis also fell sharply. The Jeep maker said it was temporarily halting production at auto assembly plants in Mexico and Canada. The turmoil spread beyond stocks. Oil prices fell more than 6%, and investors sold gold after its sharp rise last year. Investors said the sell-off had been orderly so far, and few investors were surprised by the retreat of stocks after their gains over the past 2 years. Although the scale of the tariffs in the U.S. came as a shock, the central bank is expected to review interest rates and work on stimulus packages to ease market uncertainty. Clearly, the route was a harsh, early decision against Trump's historic tariff plan. Even before Wednesday's announcement, his abrupt trade policies had destabilized investors, corporate executives, consumers, and retirement savers. As we know, the White House has drawn up a list of countries that will receive reciprocal tariffs, including some of its biggest trading partners and countries where people don't live. Many economies, including the EU, China, Japan, and Taiwan, will see new tariffs of over 20%. The basic 10% tariff will take effect on April 5th, while reciprocal tariffs will begin on April 9th. According to a White House statement, the Republican president plans to impose much higher tariffs on products from dozens of other countries, including trading partners such as China and the European Union. China, which faces tariffs totaling 54%, and the EU, which faces tariffs totaling 20%, vowed to retaliate on Thursday. So what do economists think about the situation? Economists have been warning for months that high tariffs pose a huge risk to the U.S. economy, raising the price of everything from cars to wine for consumers, and destabilizing the U.S. role in the global economy. But that didn't stop Trump from striking a celebratory tone on what he called Liberation Day. Trump sought to portray the tariffs as the start of America's golden age. We're going to start being smart, and we're going to start being very rich again. Trump said. Trump continues to push his own ideas to the forefront, drowning out the voices of economic experts in this process. Of course, there is no shortage of officials who support Trump. Trade Minister Howard Lutnick defended this move. Lutnick stated the following: "The president is not going to back down from what he announced yesterday. He's not going to back down." Several major American business groups, including the Business Roundtable, a consortium of leaders of major U.S. companies such as J.P. Morgan, Apple, and IBM, opposed the tariffs and urged the White House to quickly reach an agreement and remove the tariffs. In a statement, the Business Roundtable emphasized the following: universal tariffs ranging from 10 to 50% risk causing great harm to American manufacturers, workers, families, and exporters. As long as the tariffs remain in place, the damage to the U.S. economy will increase and could be exacerbated by retaliatory measures. The National Retail Federation, which lobbies for the retail industry, said in a statement that the new tariffs negatively affect the business environment for retailers. The group continued, "More tariffs mean more anxiety and uncertainty for American businesses and consumers. While leaders in Washington may not care about higher prices, hard-working American families do. Contrary to what Trump says about the jobs the tariffs will create, the National Association of Manufacturers said the tariffs actually threaten investment jobs, supply chains, and thus America's ability to compete with other countries and become the leading manufacturing superpower." The tariffs are also unpopular with voters. A poll released before Trump's announcement found that only 28% of Americans believe the tariffs will help the economy, while 58% believe their impact will be harmful. But in his speech yesterday, Trump seemed ready to challenge any criticism. Trump emphasized the following: "In the coming days, there will be complaints from globalists, from outside sources, from special interest groups, and fake news. This is going to be a completely different country. In a short period of time, it will be something the whole world will be talking about." This whole scenario reinforces the possibility of dark days ahead for the U.S. markets, now radiate a deep pessimism about the politics of reinstating a president who promises urgent improvements to a flawed but robust economy as the outlook darkens. Analysts are increasingly alarmed about the potential for a recession. For decades, American shoppers have been the consumer of last resort. For world markets under this implicit arrangement, other countries produce the products that U.S. consumers buy at relatively low cost. This produces the large trade deficits that Trump has long lamented. As Trump emphasized the other day, this setup has cost the country manufacturing jobs. Some parts of the country have managed the transition to a service-oriented economy better than others, and it took decades for inflation adjusted average earnings to surpass the levels of the late 1970s. Indeed, real average earnings for male workers only returned to those levels last quarter. The problem, many analysts warn, is that the genie cannot be put back in the bottle without squeezing U.S. wages. When Trump showed a graph on Wednesday showing how much other countries are billing the U.S., he was actually describing the size of the country's trade deficit. With each of them, for example, the United States has a huge deficit with Cambodia, but mainstream economists do not claim that this robs Americans. Instead, the gap merely reflects the fact that the United States buys more goods produced in Cambodia than it sells to itself. So why is Trump so eager to use tariffs? Despite the crisis since the 1980s, Trump has strongly argued that tariffs can stimulate the U.S. economy. He believes they will encourage U.S. consumers to buy more American goods and increase the amount of taxes collected. Trump also wants to reduce the difference between the value of imported and exported U.S. goods. The White House said other countries are taking advantage of the U.S. by imposing their own high tariffs and other trade barriers. The U.S. president stated the following: "For decades, our country has been plundered and pillaged by countries near and far, friend and foe alike. As we can see, Trump is taking an enormous risk, putting his presidency on the line. If successful, this move could reshape the global economic order. Trump promises that it will rebuild American manufacturing and make the country more self-sufficient, but he risks losing allies. An economist warned it could drive up prices and lead to a global recession." Expert economics editor Faisal Islam argues that a complex global trade war seems inevitable. He says Trump's decision to increase revenue from tariffs beyond the level of the 1930s will lead to major changes in world trade patterns. Thank you for tuning in.